Hey everyone, guess what day it is? That's right, it's Mortgage Tip Tuesday. Another Tuesday, another tip with It's Your Girl, hashtag JLoan. And that's right, I'm always so excited to come to you every Tuesday and bring you some fantastic information on your mortgage journey, whether that's today or whether that's in the near future or the far future. The whole purpose of my videos is to provide you with information that'll help you or someone you know when it comes to doing anything that has to do in my realm or my specialty, which is mortgages. Before I get into my Mortgage Tip Tuesday, we have to talk about what today is. Today is National Election Day. So of course, I'm never going to talk about politics, but I will tell you, you've been given the right to vote. I do feel you should exercise that right. Because although this is not your presidential election, these are our midterm that helps, with the in-between, our Congress, our Senate, our state, our local laws and policies and things that go into place. So I think it's very important that you do exercise that right. But again, that is up to you and your choice. But since you've been given that right, especially as a minority woman, we were not always given the right. So I want to take the opportunity to use my right to vote, and hopefully it will make a difference in the world, especially in the world that we're in right now. High inflation, Fed rates are high, mortgage rates are high. Something has to change, and hopefully with our votes, we will be able to begin to see some type of relief or financial relief for everyone. So I wanted to talk to you today about closing costs, and I wanted to break down a scenario on how you can get your closing costs paid for in this market. But in order for me to do that, I'm going to incorporate a little bit of down payment assistance, but I also want to talk to you about a true scenario of if you were looking to buy a home. We're going to start with no one helping you and then how you can get help. So first and foremost, when you buy a home, you can get into a home with as little as 3% to 3.5% conventional FHA, okay? So when I speak of today, I'm going to use easy numbers. So of course I'm going to use the 3% so I don't have to bust out my calculator. And then we'll kind of break down from there. But your down payment is one thing that the seller cannot pay for you, okay? That can come from gift funds. It can come from your own pocket, your checking, your savings. It can come from 401k, but it cannot come from the seller, okay? And it also can come from a down payment assistance program, which I happen to love, and I still believe that we have the greatest one in the state of Texas that is still a true grant with no payback. So let's talk about a scenario. So right now, I want to say that a home at this moment would probably, we're going to just start with easy numbers. So we're going to do $300,000 home, okay? And your down payment of 3%, okay? So we do times 3% for your down payment. This means out of your pocket, whether it's a gift, down payment assistance, or anything, it's $9,000. Okay? So remember, first I'm going to talk about no one helping you. Okay? So we're going to talk about the scenario. So $9,000 is your down payment. If, in addition to your down payment, you have closing costs. And I typically tell everyone to estimate that your closing cost will be another 3% estimated, okay? Which means you're gonna have another $9,000. So if no one were helping you to buy a $300,000 house, if no one were helping you, estimated out of pocket, you're gonna need $18,000. $18,000. No one's helping you. You need this on your own. But where you can get help is if you qualify for any grants It can be applied to either one of them. Right now, we're offering up to 3%. So 1 to 3%, depending on what you qualify for. So if you can get a 3% grant, it will take care of your down payment or your closing costs, which will then lessen the amount of out-of-pocket to $9,000. But what if you could get a grant and have your seller, since we are in a market now where homes are staying on the market longer? I talked last week about helping you with your interest rate with the seller being able to do a 2-1 buy down. But what if you're okay with the interest rate, but you just don't have the cash to help you close on a home today, right? Because everything's more expensive. You may be spending a little bit more money, but I still 100% believe that buying a home is a better investment than renting, especially if you are ready for it, right? So let's talk about what your seller can do, right? So besides the 2-1 buy down, where they help you buy down your interest rate, they can help you with your closing costs. So different loans are going to allow them to contribute a different amount, okay? So on conventional, at 3% down, your seller can contribute 3%. So max, 3% seller. I'm just gonna put closing costs, okay, CC, okay? If you're doing FHA, your max is 6% seller. Closing costs or contributions, whatever makes you more happy, right? And then you have VA, and VA allows max 4% seller concessions or closing costs, okay? And then you have USDA, and this is for rural housing. And this is your only other 100% financing option besides VA. Again, if you qualify as for rural area homes, we can also talk about that as well, right? And your max on this is 6%, okay? So, just want to talk about conventional because this 3% down is a conventional product. It's not an FHA product. It's a conventional. So, if you qualify for the grant that will pay your $9,000, and your seller can give you 3%, which is your back end, this $18K now turns to 0, okay? So you can get help. You have to find the right seller. You got to find the right lender. And there's lots of grants out there, but I will tell you the grants that are out there right now, the majority of them are what you call deferred second liens, which means you got to stay in the home for a certain amount of time, typically 3 years, in order for you not to have to pay back that grant. But it's not just if you sell the home. If you refinance the home as well, you must pay back the grants that are out there right now. And this is online. You can see it online, okay? So if you do not want a grant that you are stuck or cannot refinance, which means you'll be stuck in that higher interest rate, you should really look into giving me a call because we have a true grant option, no payback, no time frame in home, where you do not have to pay it back. So if rates get better and you want to refinance, you don't have to pay back that $9,000. Okay, super important to understand that because they will try and tell you or sell you that, well, you can always refinance it. You can always refinance it, but you got to pay it back, and that will be included in your payoff. And then you have to have the equity in order to roll those costs into a refinance loan. So if you don't have the refinance equity in there, then you have to pay that out of pocket. So it's really important for you to know that. So keep in mind, you can actually get into this home if you have a grant and your seller can pay, or even if you have this, you don't qualify for the grant because everybody doesn't qualify for a grant, right? There's restrictions, there's things. The seller can still pay for your back end, which now leaves you owning a $300,000 home for $9,000. I don't know what to tell you. That sounds like a great option. And keep in mind on a mortgage, not that this is an advantage, it's just a reality. If you close a home in November and your first payment is until January, so you still do technically skip a month, I'll go into why later, but you do technically skip a month. And so not only are you saving because the seller's now contributing, it doesn't matter that interest rates are higher, because if you can afford it, it doesn't matter, right? It doesn't matter. If you can afford it, it doesn't matter. But now we're helping you to lessen the amount of financial burden that comes with closing a home. So if your seller doesn't want to give you anything, you don't qualify for a grant, a $300,000 home with 3% down is typically going to get you your 18 grand. But if you can get a grant and seller help, you can get into a home with, no money. But keep in mind, you still have your deposit on the contract. You still have to pay for an inspection, and you still have your option money. And then obviously you have to pay for an appraisal. These are all out-of-pocket expenses that come with a home, even if you have 100% financing. So you still can't say, oh, well, I'm going to get a grant and the seller's going to pay this, and so you told me that I can get into a home with no money down. You still need money. You still need money because you still got to prove to the seller, hey, I'm serious about buying your home. So it's typically 1% earnest money. Your option can be anywhere from $100 to $1,000 or $5,000 depending on the price of the home. And then you have an inspection that could be around $450. And then you'll have your appraisal fees once you come to the lender. Those are all out-of-pocket fees that you must pay. So I always tell my borrowers, even if you qualify for all of this, you still want to make sure that you have money in the bank. One, because you need it. Two, think of the risk for an underwriter. If an underwriter is going to approve your loan, if you have no money in the bank, okay? You got to save money, guys. You got to save money before you go through this process, whether 100% financing or not. So anyways, if you want to talk about these options, you want to see if you qualify for any grants, if you want to see if you qualify as a whole, and then we can get together and get with your realtor once you're pre-approved and talk about what you need from the seller in order to make your dreams come true, please give me a call, 817-601-5456. Remember, it's your girl, #JLoan. Until next week, I want you to be safe. Of course, I want you to be blessed. And I hope you have a fantastic rest of your week. Until next Tuesday, talk to you then. Bye-bye.